What happened?
Yeah, so what you're seeing, Cory, is that this is a company that has really cut and cut and cut, and is, extremely lean in terms of, overall expenses. So that as the top line goes, you're going to see that right away on the bottom line. Now, the company experienced a few different dynamics in the quarter. They still are suffering from the impact of FX, of currency fluctuations. Commodity prices took a spike, so they saw, in some cases, as much as a 50% increase in memory prices. So that, flows through to the bottom line. And then don't forget that, you talked about a couple of acquisitions. I would say those probably aren't that impactful yet, except for Rabois.
Well, obviously they're not impactful because the profits are not moving at all.
Yeah, fair point. But what they also did is they named a new head of services, a new head of sales, and a new head of the channel. And I think that, from an execution standpoint, they had some issues. And you're seeing that right away in the results. And again, like I say, where the top line goes, right away, there's really no place for the company to maneuver when they have a shortfall on the top line, which is what they had.
The number that I want to bring up a chart of the free cash flow numbers. This is a number I look at for a lot of companies, and I think it's important for HP. But I'll give them a break on this one. It was a horrendous free cash flow number, a $2.4 billion decline in free cash flow. But I think part of that was related. There was a footnote, and I don't want to read too much into that, because there was a footnote saying that they were essentially moving some pension liabilities to the joint venture that they created in the quarter.
Yeah, again, there's going to be a significant amount of puts and takes in terms of what the history of the company has been. But make no mistake, it was a weak free cash flow quarter, and that comes out in the results straight up.
I don't want to see that. Keith Rabois, let me ask you about this from a bigger picture level. I won't make you do a model the company here on the fly. But I think it's really interesting to see this change in computing when we see the results from, I don't care if it's like Oracle Sun Division, IBM, Dell, we don't see results from anymore, even Cisco, because you see we're going from a world of selling servers and computer equipment to every company to selling it to 3, Amazon, Microsoft, and maybe Rackspace or Google.
Sure, and I think that there's a big macro trend, like all the company brands that we grew up with, or I grew up with, IBM, Oracle, let's say HP, are going to be less relevant. I mean, I think you see it in IBM's numbers. It's probably highly correlated with HP's numbers, and none of those companies know how to get sort of on the new wave, and it's not clear that they have a new wave in them, and they may just be minting, mining the cash flow that's left in these companies for the next 5 years, but there's not a core growth strategy there unless they get lucky and acquire something that has real momentum, real fuel, real rocket power behind it, and those are hard acquisitions to do because those companies know that they have real momentum.
And the market knows it too.
Yeah, the market, I mean, like the founders of those companies don't want to sell those companies. So fundamentally, they have a structural problem. The world has changed, and when you have 3 buyers, let's say, the buyers have power. They have pricing power. So at the end of the day,
the sellers have pricing power.
Well, depending on who the buyers.
So the sellers of startup companies, the buyers of what? Of Amazon, of the big cloud providers.
When there's only 3 people you're selling to and they account for a huge fraction of your revenue, you don't have a lot of leverage. And there's real structural problems at all of these companies. I would short, sort of all of them as a basket.
Right.